In November, OPEC members agreed to limit production. During months of negotiations, Iran had refused to cap its output. Recently freed from sanctions, Tehran wanted to pump as much oil as possible. So why did Iran finally agree to a cap? For Iran, 2016 began with Implementation Day, which lifted international sanctions that had stifled the country's exports. The government had set the stage for foreign investment by unveiling the Iran petroleum contract in late 2015. Under the plan, 52 oil and gas fields were made available for outside investment. Executives who spoke to TOGY were quick to spotlight impressive developments such as South Pars Phase 12, which was brought online in March 2015. While its industry still needed foreign investment, Iran was able to raise production throughout 2016, adding 500,000 barrels by June. Meanwhile, foreign representatives were keen to sign deals with Iran, but a lack of clear contract terms held back investment. In late 2016, the Iran petroleum contract came to the rescue. The first deal with an IOC, Total, was signed on November 8. Shortly after, a deal was reached with the International Pergas Consortium, and then one with Schlumberger. Iran hiked production throughout 2016, and by November was producing 3.7 million barrels of oil per day. Having secured higher production and a more confident future for the market, the country's officials came to the table with OPEC and agreed to limit output at 3.8 million barrels. This clever maneuvering strikes a balance, letting Iran benefit from both high production and high prices. Following the deal, Iran's petroleum minister said the country expects an additional $10 billion in oil revenues in 2017. For more insight on the Iranian market with hundreds of in-depth company profiles and interviews, log on to TOGY. TOGY has the stories and the infographics behind the news.